One.
Okay, folks, jam-packed show today, abbreviated. We're going to go right to it. S&Ps are just traded down 2.5 handles at 47.94 and a quarter. Let's bring in Triple D and Money Mitch here. Dennis, we're down, but we're not out. Nike getting stomped. What is going on out
Well, we're
there?
not down, Joel. We're basically flat. I mean,
Flat.
this
You're
is
right.
unbelievable. This market resilience is nothing short of absolutely incredible. We
Yeah.
get the FedEx earnings a couple of days ago. The disaster of the report, obviously, and this, obviously a lot of stocks, like just ignore it. We don't care. Well, last night we get an epic disaster in Nike. We have like retail apocalypse here because we have retailers down all over the place. Nike down 12%, just a huge move down. But, Lululemon and Simply Play, it's down 2%. Under Armour down 5.9%. I mean, we're going to get to these earnings in a second here, but I just want to talk about this overall resilience in the market because you have retailers down everywhere here. And the IWM is up. It just doesn't care. You have S&Ps trying and now going green here. So, I mean, it just does not care. You have China getting imploded overnight. The S&P just does not care. It's the same story, it seems like, all the time. The market just rotates into something else to pick up the slack. So if you're sitting here and waiting for your big bearish headline to drive you down, it seems like there's going to be nothing that derails Santa Claus from coming to town.
Well, if you were playing the Santa Claus rally, especially maybe playing it to the Santa Claus rally on the retail trade, I'm wondering if this was more buy the rumor, sell the news as we finally get an earnings report here. Nike Q2 EPS $1.03 beats the 85-cent estimate. Sales of $13.39 billion, missed the $13.43 billion estimate. They did report fiscal quarter 3 revenue to be slightly negative, and for fiscal quarter 4 reporting revenues to be up low single digits, which were both below the consensus, of course. They also did mention, though, a plan to cut $2 billion in cost over the next 3 years. I thought that was a good mention, but of course, the focus here on the revenues being slightly negative for Q3.
Yeah, and I think they also had some guidance in next year as well, obviously, like full year. Either way, when it's down $15 and not even getting a sniff of a bit, you'd think it'd put some pressure on some other stocks. And it did put pressure on retail stocks. But you'd think it would spill over and people would be like, oh, maybe, you got FedEx and now Nike's not that great. Maybe the soft landing isn't happening here. This market cares nothing. Nothing. It'll punish the individual stock. FedEx gets no bounce whatsoever. Nike has had no bounce whatsoever. It continues to go straight down here. But they're like, nope, FedEx's problem, Nike's problem, buy stocks. I mean, it's frustrating to just watch. Again, if you're bullish, you're just all in, you're like, yeah, it's awesome. Yeah, rainbows and teddy bears and everything good. But when's the market actually wake up? Like, when do we wake up and say, like, we actually care about fundamentals again? I mean, and the China story here, let's just go to the China story here for a second because we're going to get Tim Seymour on earlier. He's coming on at 8:10. I want his thoughts here as well. But China's getting whacked here again, too. I mean, how many FXI, this is starting to approach the October lows from 2022. I mean, it is making a new 52-week low here right now as we speak. So you just have a completely different story over there. So FXI going down, BABA, we know can never, get anything going here. We know the only stock that's got anything going is PDD. I mean, there's just a lot of stocks that have just been, really beat up here, obviously, and market just like just the FedEx and Nike to just knock the market down at all just makes me just think there's nothing going to knock this market down.
Real quick on the Nike, you got a little bit of a bit. I mean, you're off the pre-market low of 106.60. Give it back. All these gains. Top right chart. You're right back here. If you want to be a buyer today, let's see this 104.5 to 105 area. It's kind of where you broke out from and retested. So, if you're looking at it short term, that's a big level. I should not be keeping an eye on Nike. I'm not even going to talk about the top of yesterday's range. Deckers is getting hit on this finally, down $24. Foot Locker, that had a big rally too. The only thing, with Nike is look at the expectations. Like, look at that chart since the October earnings. I mean, that's just one heck of a move. They had to blow it away. They didn't blow it away, and they lowered guidance. So Nike getting stomped on here today. S&Ps are flat, and as Dennis was mentioned, there's a bidder out there.
The bidder is Santa Claus. Santa Claus is holding up this market here. We officially, I believe, start the Santa Claus rally here today.
Yes.
This is official here now. So the seasonality trumps all, I guess. So we don't care that China's making new 52-week lows. We don't care that Nike's getting slaughtered. We just care that Santa Claus is coming to town and there's no stopping it. So if I'm looking at my screen, everything that really didn't report, get out of retailers. You can't talk retailers because they're all getting hammered. Can't talk China stocks because they're all getting hammered. But they're going to buy something. They're buying oil stocks. Just looking through, they are buying. They're not buying. Like, it's a little bit of mixed bag. I would say it's half green, half red, which is why the S&P is flat, because it's half green, half red. But I just look here and think, like, I can't understand how we just don't, we get that 1% down day, and then yesterday they just buy it back in the afternoon. And I just can't understand the resilience. You just got to stop thinking logically about this market and just trade what's in front of you. This market just wants to go higher. I mean, we're going to get PCE. What happens, in 24 minutes with the PCE? If it's a little bit hot, they probably just say, it doesn't matter. If it's a little bit not, they're going to rally the hell out of it. So hard on the bears, man.
It is. And I mean, it's kind of hard to even change, right? I mean, every single time you've changed tunes, or anybody, at least that I've seen change tunes, it just seems like you just get run over right now. Being a bear, easy way to get run over right now. So I know that there's
it's been an easy way all year, Mitch. Yeah. I mean, bears have been murdered this year.
I wouldn't say overall. I mean, it depends on your timing, right? I think now would not be the right timing, right? Because there was some declines, right? We did go to a couple corrections. If you're shorting then, you probably did fine. But overall, yes, definitely. The bears have been getting stuffed. And now, does this leave room for the Santa Claus rally to really get us to all-time highs? What do you guys think?
I mean,
probably.
We're right there.
You've done it in the Qs, right?
Yeah, I'm looking SPY, and I'm like, man.
Have we had a Q? I don't think we have on the Qs. We had all-time highs. We had 52-week high. Did we?
Oh yeah, you're right. There's a little one up there.
408. Yep. Oh no, we did. No, we did.
I think we hit.
Yeah, we did.
Highs in the Qs.
Yeah.
Can't stop.
S&P cash, just to keep you. We did have a high. I got to go to the cash because of the way things change with interest rates and the premiums. 48.1662, and so far we have gotten to 47.78. So pretty darn close there.
Bristol Myers in the news today. Let's talk about Bristol Myers acquiring its acquisition of Karuna Therapeutics for $14 billion. This move grants, of course, access to a potential breakthrough schizophrenia drug. Of course, this is going to also aid the company in addressing a patent expiration that's coming into play. This is for $330 per share in cash. KRTX investors are definitely with a little bit of a smile on today.
Christmas present.
Premium. This is the present right here.
Yeah.
It's a big 48% here. What a premium they do pay for these small biotech companies. And we've seen a few of these. We've been talking about the XBI and just the diamonds in the rough. I mean, that's where we're really at, is just this market here has been, looking into smaller, obviously, biotech companies, and a few of them have been getting bought. It's why the XBI has really started to lift. It's really lifted with rates. I mean, rates have come down. That's really helped it. But what else has helped is we've had a few little deals. So finding those diamonds in the rough, and congratulations to KRTX shareholders here. They're having their payday today.
Yeah, a little bit of a little discount to the actual cash, but I mean, time value of money playing in. If you want to cash out early, you can. If you want to hold, doesn't look like it. I don't know about the antitrust. It seems like the patent thing you mentioned, but that's not. It seems like they're avoiding the patent. 322.30, of course, is the pre-market high, and then 330. When's the deal supposed to close, Mitch? Does it say?
I'll look that up right now.
Okay, I don't have it.
You don't see the present? You don't see the present on the screen?
Let's see.
Oh,
nice. Nice.
It's a present, baby. There you go. You guys
Nice
got
money,
it there.
Mitch. I like it with your graphics.
Yeah.
Hey, where's your elf, Dennis? You get rid of your elf?
Yeah, what happened to the elf?
He moves around every night. You don't know how
flies,
the elf on the
man.
shelf
Come
work?
on,
It just
Joel.
flies
No,
to another spot every night. It just magically shows up somewhere. Can we grab, is Tim Seymour kicking around here?
Almost.
Bristol Myers getting a bounce here, way off the pre-market low. So they got the 49.60 on light volume, getting a nice bounce here to fill the gap from bottom of yesterday's rate. I mean, you're right. You're opening right into yesterday's low. So if they think this is the greatest deal ever, they'll pick it up here, get it bidded 50, 80, 14 billion. I mean, it's a chunk of change, but Bristol Myers is a pretty big company, right, Dennis?
It's a small deal for them, but it is still a chunk of change. So Bristol Myers is getting hit. I'm still long Bristol Myers in my long-term portfolio here. I just feel like there's value down here. I feel like if we're really going and we're buying and not worrying about interest rates nearly as much here, I feel like there's value with Bristol Myers. I feel like there's value with Pfizer too. I feel like there's value in some of these stocks, and I feel like these stocks could actually, like pharma stocks, we haven't talked, not Eli Lilly, because Eli Lilly has just exploded. This market just gravitates to a story. Mitch, you know it better than anyone.
Yeah.
This market gravitates to a story, and if you don't have a story, they don't give a shit about you. That's really what it is. This market is all about a story. We've got the weight loss story going on with Lilly and obviously NVO, and those stocks have just exploded to well, Lilly especially exploded to crazy multiples on stories. The AI story driving the bus all year for so many stocks. You don't have a story, you don't get bought. That's it. This market is just all about a story. Maybe it was GameStop that started it all, that we were just story traders. A hot story is where the money goes to, and fundies are just forgotten.
I agree. And I think that one thing that we always need to keep in mind is that when story starts to run a stock, sometimes the fundamentals and technicals just go out the window for a little bit of time. And they do come back into play, right? We start talking about multiples, expansion, and things like that. But always got to remember, when stocks are hot and they're riding on story, they can just keep running. So that's one thing that I've learned to not get in front of, because that's an easy way to get wrecked. All right, let's take a look. Of course, I think we have our guests now, so let's go ahead. Let's get to our guest team. We're going to keep it going today. Fast action pack. Let's bring in Tim Seymour.
Tim Seymour, CIO of Seymour Asset Management, joining us here on Pre-Market Prep. Tim, how you doing? How's the year been treating you?
The year's been treating me great. It's been a year of picking stocks. It's been a year, obviously, of the sentiment typically being pushing in one direction, and that's led to major counter trend rallies. I think you guys know this over the years. I'm kind of a long cycle investor, at least with some of the things that in my international world, and there's some really interesting long-term trends that I think have been continuing to play out, whether it's the dollar. We talk about rates all the time. The move higher in rates is not just, and then the move lower, of course, but I still think we're in a move higher from 2015 on rates that I still think at least still needs to be proven that it's not still going higher. The move in gold, the 20-year gold chart is one of the best charts out there. So there's a lot to talk about. It's been a great year. Most importantly, friends and family, a lot of good health, and the Rangers have come out of the gates as the best team in the National Hockey League. The best team in the National Hockey. Let's just call it what it is.
Oilers Rangers tonight.
I think it's just gonna happen.
We got a huge game tonight here. Oilers versus Rangers. What's gonna happen there? I think the Oilers goaltending will implode for them though, so you'll probably be fine as long as you get 20 shots on net against Edmonton. But
is Cam Talbot still in the nets for them?
Wouldn't it be nice for Edmonton to have Cam Talbot, because he is like leading LA Kings out there? Cam Talbot show in LA. No, Edmonton has garbage in net, just garbage in net. And that's what's going on here.
Because there's 4 or 5 Rangers backups that are, including Georgiev in Colorado and Anta in Carolina. I mean, you put in a little time as a Rangers apprentice backstop, and it seems to lead to stardom somewhere else.
It does. Isn't that the truth? They're like the farm system. The farm system for the rest of the league.
You guys stole one from the Wings a couple weeks ago. Some bad calls in there.
A lot of them.
Yeah, and I don't know what's going on with Patrick Kane there, but I want to ask you something here.
Right.
Okay, so the conventional wisdom this year was supposed to be don't fight the Fed, right? Because rates are going up, and you should have alternatives to the market, right? And that happened till October, and then you all know what happened in November and December. It could be a flip of the switch here next year with rates going down, that the market goes down with it. Is there any chance of that happening? Or is it just good when rates go up and good when rates go down?
No, it's look, obviously higher rates were bad, so lower rates seem better is of course what we've been doing since rates peaked in the end of October. Market, we all know what these numbers are. So, it's 20% on the Qs. It's 16% on the SPYs, more or less. It's, stratosphere on semis, all making relative new highs. There's different pieces of this analysis, but you're asking me about rates. We all know that lower rates ultimately are not what we want. And we're talking about, whatever that line in the sand is. It's probably 350 on the 10-year where people start to get really upset. And it is emblematic of, at least the economic conditions. Everybody's got their history books out. Everybody knows when the Fed starts cutting. It's there's pick your timing on that. It's not good news for equities, and they're cutting for a reason typically. So look, I'm not sure we're going to move a whole lot lower on rates. I'm not sure we're supposed to move a whole lot.
Okay,
lower, and that's based upon the economic fundamentals we have right now. I think the labor market's going to continue to deteriorate. That's what the Fed wants. I think discretionary spend is going to start to pull in. I think the sequencing of all of the post-COVID economic realities have been much slower to play out. And so, but from a market's perspective, and this is what you guys do every morning, it's the market you have, and the market we have right now tells me that I still think that there's a fair amount of cash on the sidelines. I don't even think we've really seen a blow off top. I know this is crazy, but I think we're going to go higher. But I think I think you do need to be dancing by the door in a handful of trades. I think there's some great setups for next year. We all know there's parts of the real economy that have really underperformed and have underperformed this move. So I think there's different places to be looking that I think, especially for a lot of your audience, whether it's an advisory community, self-directed investors, people that are looking longer term. Like, there's people who love to trade the market every day. Pick whatever part of your portfolio and of your net worth you want to do that with. But if you're investing and allocating over long term, there's some really interesting stuff to do with the market that we have right now. And so they're always wild years. This one seems like it really has been a little crazier. I'm looking up at my screens, and again, I think this breakout in gold should be telling you something, and I think it should be telling you trends that have been, we've started talking about why central banks were buying gold and why people are buying Bitcoin. We could have had this conversation 5 to 10 years ago. We all know the U.S. doesn't lose reserve currency status overnight, but we also know that some of these trends and the foundations for change are well in place, and they're not going to change. And so anyway, I think the move lower in rates is 385 10-year right now is probably a place that feels like a sweet spot. I think the dynamics for the housing market, I don't think get a whole lot better. The financial conditions out there have gotten a lot looser, and that's not going to help the Fed's job. I think we have a lot of there are structural elements of inflation here that aren't going to get a lot better, and in fact probably hold here, maybe get a little worse. If the Fed wants to hold the line at 2%, then I don't think we're going to get there.
What about China? And overnight we get hit here again. I know Tencent was getting whacked here overnight on more online gaming restrictions here. Regulation is just been an issue for China stocks for a very long time. But, just quietly, the FXI is trying to make a new 52-week low here. I mean, it is the complete opposite of what we have over here in North America. I mean, other, emerging markets have done fairly well, but China just cannot catch a bid. PDD has been okay, but all the other ones like Alibaba, and you can just go through the list, JD, Baidu, they're all just hanging out not that far from 52-week lows. It's been a really tough trade. Is there a catch-up trade for China in 2024?
Well, there's certainly a counter trend dynamic here. There's sentiment on China is as low as I've seen it, and I think you guys know, and your audience knows that, or some may or may not know, I've spent a lot of my career investing internationally, and I think the setup in China is not great, but I think sentiment is worse than I've ever seen it. But look, think about Tencent and think about Alibaba and think about the pressure that's coming from within, not coming from U.S. investors. And this is part of the problem. We've had these moments where we thought, okay, Jack Ma has been, returned from his weekend at Bernie's. Joe Tsai is a really credible guy and a guy I think Western investors know and can get comfortable with. And, he's kind of put into a chairman's role that looks like, okay, they kissed the ring. It's time to move on. They're going to spin off assets. Some of the parts make a lot of sense. Look, I own Alibaba and I've traded it, but I haven't traded it as well as I should have, which means you trade every 30% rally, of which you've had 5 in the last 18 months or so. It seems maybe it's 2.5 years. But right now it's hard to truly believe that, especially after they've called off a couple of the IPO and a couple of the spinoffs that were part of this catalyst. But I think the good thing for markets here is that we do live in a world where China GDP of 8 to 12% is not what the world needs, and China's GDP was driving our market at one point. I do think you're in a place where China is also making changes in terms of how they approach monetary policy and fiscal policy. I do like emerging markets and I do like international. So let's be clear. I think if you look at what's been going on in Brazil and Mexico, those are the 2 biggest economies in Latin America, and at least in terms of both some of the the political changes, some of the dynamics, I think, on where the central banks have already made fiscal adjustments. I think the real is cheap. Typically, when you're investing in emerging, the currency can be 50% of your return profile. That dollar chart, that Dixie, you had a double top, kind of going into this year, which have now led to, people are not, maybe they are, maybe you guys are talking about it, but people are not talking. They should be talking just as much about the move in the dollar, which is 5.5% in 32 sessions, as they should be talking about rates. Okay. They are extraordinary. So the setup for international and also multinationals is fascinating. I think you guys know I'm a research advisor on an ETF called IDVO. IDVO is the ticker, and it's seeking to find companies that are increasing their payout levels, dividend yields, covered call strategy, active strategy, and something that has outperformed the equal weighted S&P from its inception. And when I think about international, I think about these great big multinationals that a lot of people either just haven't invested in, don't know a lot about, but you're not reaching deep into China to take risk. You don't have to invest in China internationally to make money. And so, whether it's a Tokyo Mitsubishi Bank, the JP Morgan of Japan, which trades at 0.8 price to book, which is not cheap relative to itself. Although again, this is a company that's growing its payout levels. We all know that the end of YCC in Japan will be good for the banks. It'll be great for the banks. But there's also a lot of pressure on payout levels there from the Tokyo Stock Exchange, and where they've actually forced this governance dynamic. So companies are, I think, more aligned with investors. Look, the breakout in the DAX to all-time highs before the U.S. hits all-time highs. Why is that? It's not that I think the macro backdrop in Europe is that extraordinary. In fact, I think they probably have more headwinds than we do. But I do look at the pressure that's been on a lot of their kind of old economy stocks and the industrial side of it, and I say you've you've actually relieved a lot of that pressure. I think the inflation trends there obviously have changed, especially around the energy sector. I think AI and some of the technology pixie dust that has been driving our markets and our tech sector. But really, if you think about, a lot of these companies are going to benefit more from AI than, without the exception of the chip producers in AI, NVIDIA and co. I mean, this is really where you're going to see the productivity gains and the profitability gains probably. And why it makes some sense to me that some of these stocks are really rallying. Look at the move in Siemens. I mean, this is, it's 10% of the DAX almost. And I think you've got some interesting stuff to talk about. So, all right. You asked about China. I gave you my quick sketch on the world. I mean, I think it's interesting times here, even though most investors that are listening to you guys are saying, why do I need to invest internationally when I've got great opportunities here?
Don't worry about internationally. I got an interesting question right here, Tim. Of course, in late August, we got the Department of Health and Human Services recommending to reschedule marijuana from Schedule 1 to Schedule 3 substance. Of course, all eyes are on this situation because this could lead to massive investments in the cannabis space. What are you thinking? And any thoughts on when this could possibly happen, Tim?
Well, Mitch, those of us that have been following the macro in cannabis for 8 years or so or more know that a headline is not a legislative follow through, and in the case of rescheduling cannabis to Schedule 3, and to be clear, there, if you get a Schedule 2, it's not going to be as attractive for at least the multiples of the companies, but look, what at least has been proposed in the letters we've seen, even if there's a lot of redacted text to what was really sent, which is also kind of absurd. People that are following cannabis know this. I mean, we've been all spending times looking at like our microscopes in our computers and seeing where we can see, did they cross out that word? Because we're seeing a redacted letter now that was part of that original HHS to DEA recommendation from FDA. But this is an administrative act, seemingly, right? So to some extent, it doesn't have to fall into the black box of Congress right now. It might, and I still think that there's a lot of reasons for progress here. I still think that if we can avoid the teeth of the political cycle that's coming up and get something done here, then it is in the hands of this administration. And this administration has been very inconsistent on cannabis policy. And yet that announcement in August 29th, 28th of this summer was really follow through from the previous momentum of late October of 22, when the Biden administration really did start talking about all of this and said that they were going to have HHS do some research, bring the FDA in and recommend what to do with cannabis. So look, I believe cannabis should be Schedule 3. I think it's a no-brainer. I think it's obviously there's so much inconsistency in how we socially and from even the pharmacological, the efficacy dynamics of cannabis. There's no question that this has medicinal value to me. There's no question this is so much different in terms of, can people have behavioral issues with anything in life? I mean, I need to have my Starbucks every morning. It probably at its worst means, I get worked up when my kids change the channel on me when I'm watching the Ranger game more than I should, because I've got my caffeine nourished. But the reality is, and so in leaving that aside, what you saw in third quarter numbers for the cannabis sector is that the biggest companies have spent the last 2 years both with a Fed so with cost of capital getting worse, with less capital coming in, with greater risk dynamics going on for global markets. These companies who've not been able to raise new capital have become much better operators. So the most important things for cannabis in this order, I think in the next 3 months to 6 months, are no question some kind of follow through from the DEA. There's people that have looked at recommendations from HHS to DEA, and Mitch, maybe you're following this, maybe all you guys are following this. I mean, there's a timeline that people have looked at in the past, and they said it's 110 days. So we're now at 100.
Tim, sorry to interrupt you. We got the PCE number coming up. Do you want to stay on with us? You want to do it? I get a little excited, so you better move your coffee, because I get, and then Dennis goes in the background. Dennis is going wide. We're trading near the highs of the session. 99.50 is your high. Nothing in there, folks. Old time close or not closing high for the move is 20.50.
Okay.
Or geared for this PCE number. The people with the super fast internet are already getting the numbers. No algo, a little bit of algo jump in here. We did make a new high. Market is waiting for, how is inflation? How are wages? We are moments away here. I got 8:30 and 25 seconds here. What's going on, Mitch? You seen anything out there?
Not just yet. Of course, I'm looking at year over year to come in at 3.4, core to come in at 3.4, overall at 2.8. Let's see how it comes in here. There you go. We're starting to get them now. I got some durables coming in. Just looking still for PCE. Just give me a second here. I should have it any moment.
Market, I mean, we're chopping right around unchanged here. The Bulls tried to get it into 4,800 handle. The Bears have not really made inline number. I mean, I'm just looking because the market's in line here. That's what I would have to guess. But here we go. A little move down. Maybe it's a little bit hot. Maybe Jerome had these numbers. Let's see. November core PCE prices. Survey says.
Doop, doop. I'm waiting. I'm awaiting.
Wow, this is like 8:31 in 30 seconds. What's going on here? Maybe the government.
There we go. Month over month, of course, is 0.1 versus a 0.2 estimate, prior being 0.2. So slightly down there on core PCE month over month. Looking for the year over year, I'll give you guys that. That's at 2.6 versus a 2.8 estimate. Thank you, Tim. And then personal spending coming in at 0.2 versus a 0.2 estimate, prior 0.2. So pretty much in line here, a little bit down, actually, a little bit light. And I think Jerome might have been seeing this beforehand. If we look at core PCE year over year at 3.2 versus a 3.3 estimate, prior being 3.5. So continuing the trend of inflation coming down.
Tim, let's get your take.
Well, look, I was the guy that on Tuesday night or on the 12th of November, the night before the CPI number that moved the markets, said I thought we'd kind of done all we could do in terms of market lifting on better inflation numbers, and I couldn't have been more wrong about that. So the fact that these inflation trends continue is great news. Like, it's great news for the market. This durables number is also really noisy because the headline came in well above the poll, but if you strip out transport and some defense stuff, it's a pretty it's not a number that's going to tell you there's a lot more strength in there. It's kind of in line. So I think the markets are going to continue to try to bid down rates. I don't think we have 150 basis points of cuts next year, but let's watch Fed fund futures here too, because they're pricing all kinds of fun stuff in.
Okay, great analysis, Tim. Market take a little bit of a hit. We're just down just about 5 handles here. So a little action both sides. We'll just keep an eye on unchanged. Tim Seymour has been on with us. He's the CIO of Seymour Asset Management. You guys all know how to find him on Twitter at Tim Seymour. Great having you on. Thanks for staying on the number.
Thanks.
Have great holidays, and we'll dial you up in 2024. Thank you, Tim Seymour.
Thanks, Joel, Mitch, Double D. Speak to you soon. Happy holidays, everybody.
See you guys.
All right. Thank you, Tim. Like always, let's take a look. How'd the action go in the market there? Not much, right? What do you guys think?
I did buy the dip because why not? That's what you do.
Why not?
Why not? So I bought some IWM at 44. I bought a couple things down there. I mean, why not? That's what you do. In bull markets, you just buy the dip blindly. I was like, inline number. I guess I just buy the dip blindly. Buy the dip, win money. That's how it goes.
Hey, it's working, right?
Nauseating, but it works.
Yeah, it'll give you a nosebleed, but you got to keep doing it, right? And just plug it up and keep going, man. Stop crying about it.
They'll buy this market back because we're in an inline number here. This is not going to derail the bear thesis. You needed something like for the bears. They needed to see like, ooh, that's a hot number.
Yeah, spike.
That maybe makes Powell think a little bit more. There's no thinking off this number. So this number is not going to be the number that derails the bull thesis and derails Santa Claus from coming to town here. So I think Santa Claus is still coming. You know, I thought Nike would put a little dent in the party or something, you know, maybe throw a little bit of coal in the sleigh. No, it didn't. Nike didn't throw any coal in the sleigh. It just continues on its merry way.
All right, team. We're gonna start wrapping up the show right now, guys, and bring you guys over to my video that I've been working on hard, guys. I interviewed 8 experts for you guys to get the outlook of 2024. That's coming on next, so don't go anywhere. Of course, you guys can keep up with everything. Joel Elconin, will you have a closing print today, Joel?
Yep. PreMarket Prep Plus and closing print today. So everyone tune in. And Dennis, you said you were having a bad day, but I didn't think you were going to lose a D there.
He always calls me Double D.
Double D.
He's always called me Double D. I mean, you like Dennis Dick. It's like that, boom. So he's always called me Double D. I know I lost Double D.
Dale's your middle name. That's why you do it. I'm going to sign out here. I'm just going to say unchanged. I mean, we had the little dip. We didn't take out the pre-market low. Let's see if the bulls can establish that bid above that closing price from yesterday at 96.75. So, folks, Merry Christmas. Happy holidays. We'll be back with you guys on Tuesday.
All right, just to give you a preview of what's coming on next, you guys got Ryan Dietrich, Cameron Dawson, Jay Woods, Todd Gordon, Sam Stovall, and Mike Lee strategy. Of course, we also got hedge fund tips. Check it out, Dennis. It's going to be a pretty good one. This is going to go all the way until 11, and then we'll do a live trading stream. So check it out, team. Get your outlook on 2024. And for everybody, this is my present to you guys out there. So take care, and I'll see you guys on Tuesday. Smash the like. Enjoy the holidays, team. And Santa's coming to town, team. Starting up next.